If you want to know how to make money in the markets, no matter what the market conditions are, you're going to want to stick around for this video because I'm going to be going over how I do just that. Okay, so for those of you who don't know, I mainly trade ES and NQ futures. And in the past few days, we've basically just been going straight up. We'll have these gap ups, these news pumps, and then when New York opens, we'll kind of just chop and grind higher up slowly. But it's been very poor price action to trade for my system. However, I have still been able to find good setups to trade, and I'm going to kind of show you guys how I do that. And it's actually not by using ES or NQ. Now, I use a very strict set model for all of my entries. I call it the STIM model. We look for a sweep, a tap, an inversion, and momentum. So I'll show you guys what happens and what that looks like right now in the context of longs. So we're going to want to see some type of impulse move up. Then we're going to want to see some type of low set, and we're going to want to sweep that out, okay? And ideally, on this impulse move up, we have created some type of bullish fair value gap. Remember, this is an example for longs, okay? So notice we are tapping back into this bullish fair value gap after sweeping out this internal liquidity, right? This is an internal low. We have swept that. That has taken us down to the higher time frame bullish fair value gap. So that's the T, the tap. And then on the way back up, you're going to want to look for an inversion. So on the leg that you made down, the leg in which you swept liquidity, you want to see some type of bearish fair value gap left there, right? And then what's going to happen is that on the way back up, after you start to deliver out of this higher time frame bullish gap, you want to see us close back above the bearish gap we made on the way down. The reason that is because that's an inversion fair value gap, which basically signals a change in momentum, a change in order flow, and it gives you better confluence to continue to the upside, right? And so the key is you wait till we've tapped into that key fair value gap, you wait until we've swept out liquidity, then you look for the inversion, and the M is momentum. Basically, that is to say that you want good momentum while this is happening. So you want a fast sweep of liquidity and a fast move back up to the upside. This is for longs. Now, if you want a short, you would literally just hold your phone upside down, flip this whole thing, right? We dump down, then we retrace back up into a bearish gap and dump continuation, right? So, and it's the same thing. Once you get that inversion, you can often expect to continue back up to the upside, right? So that's my model, the STIM sweep tap inversion momentum. But if you guys can't really tell, part of the strategy really relies on solid pullbacks to some type of either discount range or bullish fair value gap that we've left, or, you flip that if you're looking at a bearish example. Now, if we go back to the NQ chart, at least on the higher time frames like the 1 hour and 4 hour, we have quite literally just gone straight up, right? Like it would have been ideal to maybe pull back into this 4 hour bullish gap the other day and maybe look for longs down here, but we just never even have gotten any of that these days. So basically, we've just been leaving these bullish gaps behind, right? We're not even testing them. And so when that happens, there's really not going to be many opportunities for me because I do like to trade the 1 hour and 4 hour bullish gaps, and we really just have been leaving them and continuing upwards. It's honestly remarkable. It's like I've barely ever seen this in my entire time trading. But the reason I bring all this up is because, yes, if you've been following trading lately, it hasn't been great. For my specific model, ES and NQ have not really been moving the way that I would like them to, okay? And it's fine, but it just makes it very difficult to find trades on these indexes, right? So yeah, you can look at Forex, you can look at gold, silver, crypto, but what I like to do is just look at tech stocks and maybe sometimes crypto. I'll still be able to find value in swing trading setups on the higher time frames of popular stocks and cryptos. So first example right here, you can see that this summer we had an amazing STIM model setup on Ethereum, right? So we had this weekly bullish fair value gap right here, okay? And we start to draw back down into it. So then you go to a lower time frame, and that's where you look for your inversion, right? Just like the example I showed you guys through drawing. So you have swept out this internal liquidity, right? So that is the S, and we'll just kind of mark these things out for you guys. So all of these lows, there was just kind of this collection of lows, and we swept it all out, right? We had this one, we had this one, we had all these, and they got taken out by this move down. So right here, we can type S because that is the sweep, okay? Now we can see that the tap is this move down into this bullish weekly fair value gap. And these bullish weekly gaps oftentimes are going to hold very strong. And that's why when you flip down to the daily and you can see we're delivering off of it, that's when you can look for an inversion. And as you can see, if you just select this candle right here, what do you guys notice? Well, we created a bearish fair value gap on the way down to testing the weekly bullish gap. And then we made a move right back up through it, which tells me that the move down is over, or at least subsiding in the near term. And that's a good time to look for swing longs, which I did. And as you guys can see, we had this inversion and there was very good momentum, right? It was one candle, we wick right back through, and it's just perfect, right? We close above it and all that. So that's an inversion. So we have the 4 steps: the sweep, the tap, down here, the inversion with momentum. And I say that these are good because if the indexes that you like to trade or the assets you like to trade aren't giving you good price action for a prolonged period of days, well, you can always just spend some more time looking at watch lists on other assets or other, equities. And in those, you might be able to find an opportunity. That's kind of why I like it, because I haven't traded much in the past several days, but I have found some cool new setups on higher time frames of stocks that are pretty liquid and big tech related. And that's the type of stuff that if I see a fat pitch like this, I am going to swing. Okay. That's kind of how I am. And even though it's not on my preferred asset of ES or NQ for futures, it still is the STIM model and it's playing out to a T, and it ends up just absolutely working wonders. We never even go into drawdown on this trade. That's how crazy it was. Okay. So that was nice. Next, I've talked about ASTS in my previous video. We can get out of replay mode so you guys can see the whole thing, but kind of same idea, right? We look at the 1-day chart. We see that we swept these lows inside this kind of range right here. And then what do we see? Well, we go down and we have a weekly bullish fair value gap that we tap into, and even a monthly one, which is very, very strong, right? These are going to hold much more often than not the first time they're truly tested, and we held, okay? And then you got to go down to the daily chart or whatever chart you're looking for your entry on. And right here, you can see that we had this bearish fair value gap, right? These 2 days combined kind of created this stacked bearish gap. And on this candle right here, we end up inverting, closing above. So we got in at the 40s, me and my buddies. I called this out in the Discord, and it ended up running all the way. It doubled all the way up to new all-time highs, okay? And you could keep going with this. We have an example on Google right here of a pretty good one working out. This is the daily chart. Now, as you guys can see, we have this daily bullish fair value gap right here. And yes, we wick through it, but it holds. And right here, we have a created imbalance low. Now, if you guys don't know what those are, it's a low, a swing low inside of a bullish gap. Now, those are amazing targets once they get swept to look for reversal. So you can see, if you go down to a lower time frame like the 1 hour, we come down, we sweep out this low, we create a bearish fair value gap, and then look right here, we get the inversion. Okay, so we close back above it on this candle right here, and then we're not going to stop out of this trade unless we get a close back below this inversion level, right, on the 1 hour chart. And so if you just play it, we never do, and we end up running all the way to new all-time highs. And this right here, these kind of stacked highs in this vicinity, were our draw on liquidity. And I actually ended up taking an options trade off of this setup just the other week, okay? Just the other day. So that's the type of thing I'm talking about, where you got to get comfortable with the model before you trade it at all, right? And there was even an example on SMCI, right? We have this tap into a higher time frame fair value gap, right? We'll just go like, we got the weekly bullish gap right here that we're tapping into. And then as you can see, we go to the 4 hour chart, and we start to see some signs of an inversion. Right here, we inverted the first, so you could go long there, right? After sweeping out all of this internal sell side liquidity, right? And then we're currently fighting, this is just some free sauce. If you're seeing this right now, maybe you'll get a trade off this. We're currently fighting this bearish gap right here. If we close above that, I would fully expect to make a trip back up to this, low 60s, high 50s, because we have liquidity resting there, right? These two highs need to be taken out. But the purpose of this video is to say that if you are trading a model at all, you need to be comfortable with it. And if you're comfortable with it, then you're going to be comfortable kind of stepping out of your comfort zone. And what I mean by that is you'll trade any type of model, right? Whatever, if you trade my STIM model or another person's model, and you'll get used to trading it probably most likely on an asset class or two, maybe, right? Like NQ, ES, maybe trade gold, maybe trade Forex, but you get used to it on a certain, asset most of the time. And yes, it's helpful to master that asset. That's where you got to learn your model, right? You got to learn the trading model. You got to get good at it, and you got to get good at trading it on 1 or 2 assets. But once you do, and once you feel comfortable with that, there is no reason not to try to capitalize off that same model on other assets as long as you know it works. And I've been trading this model for quite some time now, and I can tell you it does work on tech stocks and crypto and all that stuff. But do not take it from me. Please just back test it yourself, right? Forward test it, paper trade it, whatever you need to do to make yourself feel comfortable with it. But the key is to get comfortable with the model first, and then you'll feel better about taking it. Because when I was in the phase of kind of constructing this model, modifying it, taking what I learned from other YouTubers and putting it into my own kind of spin, when I was in that phase, I was only trading this on ES and NQ, nothing else. And then as time went on, I started to realize, like, wait, sometimes we're going to get swingable setups, right? Because if you guys also don't know, I usually trade like the 1, 2, 3, or 5 minute chart, right? I'm lower time frame. I'm obviously marking out higher time frame levels of importance, but I'm lower time frame trading most of the time with futures. Took me a little while to finally realize how much opportunity there was in trying to find this setup on higher time frames to swing. And it can be really nice because you can have a setup that's making you good money and it keeps continuing up or down if you're shorting, right? During the days where the NQ or ES or gold, whatever your favorite asset might be, is trading like shit. It's not moving, it's not giving any setups, but you're just sitting there. And yeah, you're kicking your feet up because you got ASTS shares at 45. I have a Discord that I am in with a few of my friends that I kind of run. It's about trading. No, it's not the free one that I have on this channel, but you guys should join that. I do have a free trading Discord linked to my YouTube bio where I get back to all of you guys, contact all of you guys, connect with you guys, whatever it is. I appreciate all of you who end up joining that because we trade live in there. We have fun. I give advice. I answer questions, connect and engage with you guys. It's awesome. But I do have a smaller group that is private. It's just literally with my friends and people I know. And we caught ASTS from 45 all the way, past 100. So, and that was using this model. And were we sitting there worrying and getting annoyed when the NASDAQ wasn't trading well or when the, S&P was chopping? No, we weren't because we were just letting our shares of ASTS ride. Same thing with Ethereum. I called Ethereum for free on my public Twitter this summer. And like I said, I got in around 2,400, rode it all the way up, sold some, at 41, sold a little bit more at previous all-time high around the top, right? We barely exceeded it. And now I'm just holding the rest, but I'm still up almost 100%. We're just under 4K. So yeah, guys, it's pretty simple. If you trust the model and if you give yourself the adequate amount of time to understand it, then you will develop kind of that bravery to try to take it on other asset classes or other stocks. And when that happens, you become versatile and you become less you can disconnect when certain assets, maybe your favorite ones, aren't giving you the best setups and opportunities. And so, with that being said, I hope this helped you guys understand how versatile the STIM model is. That's the reason I use it. If it wasn't versatile and it didn't work on literally every financial market that I've personally traded, then I wouldn't use it, right? But once again, don't take it from me. Go and back test it, forward test it, do whatever you need for yourself, but make sure to never trade with your real money on the line until you feel very comfortable with the mechanics of everything you're doing, okay? So with that being said, if you're serious about trading, you're probably still watching this video. And if that's the case, make sure to like and subscribe for more educational content, live trading, and also join my free trading Discord, link to my YouTube bio for live trading and all that stuff. And I will catch you guys in the next one. Peace.